All right. Hey, everyone. Welcome to another episode of Trading the Markets. I am your host, Vays. Let me check that the video is good, the audio is good, and here we go. All right, so we have the Fed announcement. We're going to go and take a look. I don't know if he's speaking or not. I should have been more prepared. I was just running errands and I'm like, oh crap, it's 2 o'clock. So we're going to go to screen share. We're going to go and take a look what the Fed actually decided today. We're going to go straight to screen share and take a look at some articles. I'm expecting him to raise it 25 basis points. He's going to talk it to 30, right? But the announcement should have happened 7 minutes ago. I'm going to go find out. Here's a really cool website that does show you all of the economic announcements every single week. Here we are on Wednesday, FOMC rate decision. It's coming in at 2 p.m. Eastern time, which was 8 minutes ago. So we're going to go and find out. I don't see the markets reacting very much. So the futures markets have not yet reacted. We got to go. I'll probably head over to Twitter. By the way, check out this really cool interview I did over in Miami. We're going to go to the homepage of Twitter. Let's see, we can actually do a search for FOMC top tweets. Let's see what they said. The Fed raises interest rate 25 basis points. That's exactly what I expected. Here we are, the financial summit. Nothing is really going to change. And not much is changing. FOMC 25 basis points. Pretty much the same statement as before. Funny. Minimal changes to the forward guidance. Nice. Yeah, so that's why the markets are not reacting. Not reacting at all. Let's go to a 10-minute chart. Nope, that's the Bitcoin 10-minute chart. Let's go to the S&P 10-minute chart. Here it is. The markets are rising. This being FOMC day. I've talked about this day many, many times in the past. And I even continuously have this paper opened right here. This is the FOMC announcement drift. There was a remake to this paper about 8 years later, and it's time for another remake of the paper. What the paper concludes is that the best day to be long the stock market is this day. So if the only day you ever hold the stock market is the day of FOMC's rate decision, you would have replicated the entire increase of the stock market by only being invested in these 8 days per year. So we're also going to keep an eye on this. So now we're going to move on to the next Fed rate decision. It's now 100% for February 1st. Now the next one is going to come in about 6 weeks. And you can see that the expectation, so wait a minute, I don't know if they adjusted it yet. So the current rate, now we're 450, 475. So the expectation is that he's going to raise it again to 475, 500. And we'll see how this evolves over time. Now it's going to be this. And then I think they'll raise it again to 475, 5. And then they may slow down after that. So you can see going into May that they're going to stop with their raises. That's the winning percentage here. But they could potentially raise some more. But if you go all the way out to December, you're still going to see that 500 to 525 way low, right? So basically the expectation is he's going to keep raising rates, but at some point this year, Powell is going to reverse course and is going to lower the rate. This makes absolutely no logical sense whatsoever. It just makes no logical sense at all. Because if he's done raising rates, he's just going to keep them steady. I don't understand why there is an expectation that in May, the rate is going to hit 500 basis points. Even a 40% chance that is going to be over 500 basis points. And yet somehow by December, it's going to go back down from 450 to 475. This is kind of like insane, right? It's like expecting, well, we expect our basketball team to do really, really well in the middle of the season. But then somehow going into the playoffs, we're going to start to play like shit. So this makes zero sense, right? Like, are they really thinking that inflation by the end of 2023 is going to be back down to 2%? Like what does the CME, what do these experts think is going to happen? This makes no sense to me at all. I think Powell will either be raising the interest rate by 25 basis points at every single meeting, or he's not going to raise it at all. He's not going to raise it next month, lower it the month after, and raise it the month after that. That's not how the Fed works. It's just not. It just makes no sense. So let me go back to Twitter. I'm not going to check my messages on live air. That's for damn sure. So there was a cool chart that I saw yesterday. What the hell is that? There was a cool chart that I saw yesterday when it comes to the Fed and Fed versus the stock market. So Fed funds rate, Fed balance sheet, that's not a big deal. Let me see if someone posted it. Wait, what is that? Okay, no, man. Yeah, it would have been cool to grab that tweet. I was talking about it in Spaces last night. I don't think I'll find it. But if you look at like the 30 or 40-year history of the stock market, it says the first time that the stock market is rising as the Fed is raising interest rates. And this is something I've talked about for over a year now, that the stock market can easily rise with Fed raising interest rates. And it's happening right now. And I've explained it many times as to why that is. Yeah, I won't be able to find that chart. I don't remember who tweeted it either. Too bad. It was in one of the Spaces last night. Oh, well. I can probably pull it up on Fred. Fred is the database. Fred interest rates. No, Fed funds rate. Fed funds rate versus stocks. So yeah, this was the chart. This looks terrible. It's got to be a better chart. Yeah, too bad. Yeah, here's the Fed funds rate. If we take this back to 1970, sure. If we take this back to 19, and I want to overlay the stock market on this chart. How do I do that? Yeah, I won't be able to figure this out on live air, but there's a way to do that. I'd love to overlay this with stock prices. Add line, maybe that's it. Maybe I can just do Dow Jones. Right, but now oh, it's the scale. Scale's the problem. And why doesn't it go to 1970? That sucks. I can alter the scale, but anyway, it was a really cool chart on Twitter for that. And it's always like crashing, like market crashes, Fed lowers rate. Market crashes, Fed lowers rate. Market crashes, Fed lowers rate. But guess what happened last year? Market crashed, Fed couldn't lower the rate anymore. So what does that tell you? Damn, I really want to find that damn chart. It was let me see. I don't know if you can see them. It was the spaces on who would have tweeted that out? Damn, too bad. It was Spaces by Green Candle. It was a Spaces from yesterday. I don't know, maybe he retweeted it. I don't think I hit the like button on that tweet. I knew I should have taken a screenshot. No, it's not there. Oh well, sorry guys. Where's the Spaces from last night? Yeah, this was the Spaces. But I don't know if you can see the tweets that were being mentioned, right? As part of the. That's too bad. Too bad. So basically, what you have to understand is when the stock market crashes, the Federal Reserve tries to prevent the stock market from crashing further. It's actually their job. It's their unofficial job. They'll never admit it, but it is their unofficial job. But they couldn't do that this time. So when the stock market crashed this time, and stock markets crash all the time, it's not a big deal. Stock markets pull back 20% all the time. Okay. Here, when it pulled back in 2018, the Fed was, it didn't pull back much, so the Fed didn't panic. But the stock market, you can see that the Fed kept raising rates. Let me add, we don't need to go that far. We can go to 1980. The Fed stopped raising rates in 2019, and then it started lowering rates in July 2019. So if we go back to the stock market, the Fed was raising rates during this drop in 2018, and it stopped lowering rates in 2019. So it stopped raising rates in 2019 and it held it flat. The stock market then hit a brand new all-time high in February of 2020, right? And yet, in January, from April 2019 into February of 2020, the Fed was already lowering rates for no reason whatsoever. None whatsoever, right? The market was already recovering, and yet the Fed was lowering the rate. And then when the market actually crashed with COVID, the Fed dropped the rate to zero, and it stayed at zero. And now the Fed has just raised the rate the fastest it's ever done in history. And it started raising the rate in January of 2022, or, well, let's just say May of 2022, around there, April 2022. So let's go back to the stock market. When it started raising the rate, the stock market had already fallen 10%. And the Fed had no choice, fell 15% going into May. And the Fed had no choice, so they just kept doing their thing. And the stock market did its thing. Did the stock market fall an extra 5% because the Fed was raising the rate? Yeah, probably. But now the market's back up. And the Fed is almost done raising the rate. So once the stock market breaks out, it breaks the highs of November 2022. I think the stock market will be off to the races, just like I called it back in October. Now, what does that mean for Bitcoin? Well, it means good things for Bitcoin, because when the stock market rises, Bitcoin follows suit. So here's Bitcoin. I am looking at a pullback here because it's running into the resistance of the moving average. Some genius on my comment section on my video says that moving averages aren't resistance. Of course they are. They're one of the best forms of resistance and support, because that creates one of the best trades you'll be making. Most statistically advantageous trade is a proper moving average. I don't know how that person's trading, but I'm sure not very successfully if he doesn't know that. And I am looking for a pullback, and I am looking for the moving average to be support around 20,000, just like it was resistance at 20,000 back in October of 2022. How is the future chart 15 minutes behind? When did that happen? This used to be in real time. When did they start delaying the data? Man, that's messed up. This data used to be free. Oh, that explains why I didn't see any volatility. And I'm not surprised that we are rising. Is this delayed as well? No, this is real time. Okay, so I need to switch this. Doesn't look like I should be using the CME futures data. That used to be free data, which is why I was always using it. It's not free data. I got to switch the tickers. This should be in real time then. Yep. Like the whole purpose of me using the CME futures because it was free data. So it looks like we are down on the day. We might be down for the day. We are. But man, look at this resistance. Look at this MRI resistance. Bitcoin broke its resistance. And I think you just got to count days until the S&P breaks its resistance. How's the Dow doing? So the Dow leads the S&P. NVIDIA is doing well. Look at that. Beautiful chart. Oh, come on. NVIDIA is doing great. So the Dow Jones is consolidating nicely. Dow Jones rallied all the way back to only be down 5.5% from the top. More like 6%. Someone asked for AMD a second ago. Wow. Good earnings call, huh? AMD's got a long way to go, but looks like its bear market has ended. AMD looks good. Looks bullish. All right, let's get back to Bitcoin. Nothing really to say. Nothing's changed. We will have an MRI top in about 4 hours on my 4-hour allocation chart. And we are waiting for a pullback in order to add to our bullish position. But if the pullback doesn't come, I will just have to add to the bullish position anyway, because I do think there is a greater than 50% chance we're not going to go back below 20K. Well, we can go back below 20K, but below like 17K. RUT is the Russell 2000. It lags a little bit, but it's doing well. It's broken out past its November highs. Guys, I continue to anticipate new all-time highs in the stock market, which is great if you're a Bitcoin holder. Am I worried about the death cross? Of course, I am worried about the death cross, but I'm also happy that the halving is a year away, more or less, a little more. So normally, as I said in yesterday's video, normally a death cross is literally almost death for a company on the S&P 500. But Bitcoin is not a company on the S&P 500, right? Bitcoin is more like NDX. So if we open the moving averages on NDX, the hell is that? Let me see what the colors are. Oh, my weeklies are not the right numbers. So let's compare apples to apples here. This is the NASDAQ. Trying to find the def cross. Well, that's the 2000 crash. That's not an ideal environment. I don't think they crossed yet, have they? Yeah, I can't find a good example. But hey, I don't know when the last time I looked at this chart was, but look how perfectly I called the rebound in the NASDAQ. This would have been a red arrow that I would have drawn back in May of 2022, and I would have expected the NASDAQ to come back and backtest the prior swing high of February 2020. And even I was more pessimistic, a little bit more pessimistic than the NASDAQ actually was, because this would have caught me by surprise, like the August 2022. If this did not go as high and it did not break its resistance, then like this amount would have been the extra drop. But this was my projection for the NASDAQ. And I expected the NASDAQ to go to a new all-time high, well, by the end of this year. These were my projections. S&P is no different. Transportation is looking good. Talking about Dow theory here. Transportation, I mean, still down 12% actually, surprisingly. But the chart looks good, very bullish looking. What about the VIX? The VIX is still okay. It's a little elevated, so definitely room to go up. Bitcoin's getting smacked. Let's see what the S&P is doing. I mean, you want to look at the S&P. The S&P is still struggling a little bit. 10-minute chart probably dropped. Powell is speaking now. Maybe he said something stupid. Probably said something. That's when his speech started. So he probably said something. I still think it'll rebound. But let's see. So, of course, Bitcoin is going to drop as well. $10-minute chart. Whatever the S&P does right now, Bitcoin will do. Perfect correlation. Right there. Perfect correlation. Should I turn on Powell's speech? Jesus Christ, where's the current live one? I'm sure Twitter will show it. No, I don't see it. I'm sure it's on their website somewhere. There it is.
In order to attain a selective monetary policy that is sufficiently restrictive.
Can you guys hear? Give a thumbs up if you can hear.
We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply.
Boom, look at
Our
that.
overarching focus is using our
Look at the
tools to
rebound.
bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy.
I'm gonna open one of my
We will
packs.
stay the course until the job is done. To conclude,
Been waiting to stream
we
all day to
understand that
open a
our actions
pack.
affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Great.
Let's see if there's any intelligent questions. It's always
Chris Ruger,
tricky.
the Associated Press, thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel.
No insight there.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last
this should be
quarter,
good.
we've
God,
seen a deceleration
really don't
in
like her.
prices, in wages.
She asks
and
the
fall
dumbest
in
questions
consumer
every
spending,
time.
all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story.
Oh, wow, look at the market pop. I was like opening up my cards.
Core non-housing services where we don't see disinflation yet. But I would say that so far, what we see is progress, but without.
Wow, look at that.
Labor market conditions.
Just as I expected, just as I said earlier.
Sure.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting
huge
underway,
up move.
and we continue to get strong labor market data.
Let's go back to the daily chart.
So, but you know, we'll
not
update the
there.
forecasts in March.
Beautiful.
Hi, Chair Powell, Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown.
Oh, we're a new closing high.
I believe that openings are an important
Amazing.
studying to understand where the labor market is and where wage inflation might be heading.
So you're right about the data, of course.
So new high since September of last year.
Average hourly
Awesome.
earnings, and now the employment cost index abating a little bit, still off of their
MRI
highs of
top
6 months
tomorrow
ago
though.
and more,
Careful.
but still at levels that are fairly
Super
elevated.
careful. Look at Bitcoin
Job
go.
openings
Sweet.
number in JOLTS has been quite volatile that recently. Yeah, I did see that it moved up back up this morning.
Let's see if we get a
I
new
do
closing
think
high.
that, it's probably an important indicator.
Oh, no, we
The
won't.
Ratio, I guess, is
2
back
days
up to
ago was way higher.
1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see
Second highest closing high coming in.
If you look across the rest of the labor market, you still see
It just
very
follows
high,
the S&P, guys.
payroll job creation. Quits are still at an elevated level. So by many indicators, the job market is still very strong.
Colby and then Howard.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be. And that's obviously back in December. And the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data dependent decisions at coming meetings, of course.
Just a quick follow-up. How are you viewing the kind of balance of risk between those 2 options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that.
Oh, what happened there? Well, my internet seems okay, so it's got to be the Fed. Fed forgot to pay their ISP bill.
Worry about expectations getting unanchored, and that. But if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in the core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other 2 sectors representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the 3rd sector, we don't see anything there. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see our goal, of course, is to bring inflation down. And how do we get that done? There are many factors driving inflation in that sector. And
I don't think we're getting anything more out of this.
Have inflation, the disinflationary process.
I'm gonna close it. Looks good. Looks like it's gonna be a bullish day, just like I expected. A bullish day. Of course, you could say something stupid to drop it down, but I like this rebound off the lows. A lot of stop loss hunting right there. And now I think we're gonna start rising. I would like to see Bitcoin pull back to 20K, but if the stock market is ready to go to new highs, that may not happen. We may just break out. It's going to be the highest daily S&P close since back in September. And the only thing left for the S&P to do is to break the August high of 43.17. And after that, it's new all-time highs. Here we come. Yeah, I opened the pack. Let me stop that. I opened the pack. Ironically, I got the Federal Reserve card. Looks like this. See if we can focus on it. Boom. There's a Federal Reserve card. Explains the Federal Reserve. And I got another card. Same in part of the same series. Taxation is theft card. Really cool art on these cards. I didn't get any super special cards. I got so many of these blue cards now. I got a Satoshi limited edition card. It's a cool card, but I think I have like 5 of them now. I'm just on a hunt for the Tone Vays card. I'm just gonna keep buying packs. Maybe I'll open one more. Where is it? Here they are. So these are the good cards. So the Satoshi limited edition, I have 4 of them now. Here they are. Got 4 of these. I'm willing to trade. Someone needs one. I'll trade like one of each blue cards for one of the special 1-of-1s. I only have 1 of these blockchain cards. This is apparently super rare. Seems to be more rare than those blue cards because I only have 1 of them. All right, I'm gonna open one more pack. One more pack, guys. One more pack. I have a good feeling about this one. All right. I'm going to save the last card for last somehow. Not exactly sure how. Make sure I don't damage any cards. Also trying not to see any cards. I already saw the last card. I already ruined it. The last card is another blue card. Let's go with the last one first then. What is this? Oh, I don't have too many of these. That's the peace card, I think. The unalienable rights. It's a really cool card. I'm going to protect that one. And I think I have the rest of them already. Oh, I got it. I got the blockchain cards, the second one. This is actually a pretty rare card, even though it's not like special. It doesn't have foil, but it's a pretty rare card. So I'm going to protect that one as well. And I have 2 freedom cards. Yeah, the green is part of the I got Nixon taking us off the gold standard. Creature from Jackal Island. I have a bunch of those. Coin bits, I have a bunch of those. Oh wow, this one is cool. Haven't seen this one in a while. This is the halving card. Really, really cool art. Look at that. Gotta focus. Super cool card. FOMO card. Ooh, I don't remember this one. The US dollar. And as the US dollar, you can see how it devalues over time. I don't remember this one. I might not have had this one. Cool. I think I got everything except some of those special cards. All right, well, we'll have to try again tomorrow. There's no way I'm opening more than 2 packs a day. And thank you all for watching, guys. I see Mel threw the link in the video of where you can buy one of these boxes. I did buy this. Like this wasn't a gift. I did buy it. And before I go, just a heads up. What's wrong with my screen share? Before I go, guys, don't forget, I have a couple of events coming up. One is the Financial Summit. It's in the UAE. Awesome event for traders, hedge funds, VCs, and of course, unconfiscatable. Taking place in Las Vegas, Nevada in December. We are going to add some speakers. We are adding speakers already. There needs to be one more row here. It's coming. It's coming. I got a couple of more commits. The event's going to be great. Carnivory dinner, poker tournament. Jump on board before it sells out. All right, guys. Without any further ado, I'll glance one more time, make sure nothing crazy is going on. Looks like we are even more bullish now than we were before. So this is great. Stock market is about to close at a new high. Daily is about to break the MRI resistance line. Everything's looking absolutely awesome. All right. Thank you, everybody, for watching. And I will see you all. Oh, wait, there was a super chat. Riot. Let's go check out Riot. Thanks, Surf, for the super chat. So the question was, do I see an ascending triangle? I see a massive ascending triangle, but it's kind of too late because it's like a near zero. Like this is just a massive one. I would ignore that. No, I don't see all that much. It is a weekly chart. Beautiful MRI. Look at that. Beautiful MRI buy with an extension B. Called the low literally on the week of the low. If you followed the MRI, you could have got into the stock at $3 and you would have doubled your money by now. Daily scale looks like a breakout to me. I don't really see a descending triangle. I'd say there was an ascending triangle. Sorry, symmetric triangle. Oh, that's a comment. What the hell? I mean, it wasn't great. Yeah, I guess so. Yeah, you could have drawn an ascending triangle out of this. Yeah, it fits my rules. Fits within my rules. Not bad. Breaking moving averages. It's nice. I like it. I like it. I like the breakout. Yeah, there may not be much of a pullback. Beautiful daily MRI buy inside a weekly MRI buy. Wow. Right at the end of December. Holy shit. What a beautiful trade this would have been. You could have literally got it right here on this day. MRI told you to do it. Told you when to sell also, right there. But now it's telling you to get in again. It told you to get back in here, and now it's telling you to get back in again. Did tell you to get out over here. So you get in, you get out, you lose 1%, you scream to high heavens, and now you already made up for it. All right, guys. I don't see how Bitfarm's going to be any different. They're all very correlated. I mean, it's still consolidating. I wanted to pick up Bitfarms again right here at like 70 cents, but I don't think it'll ever get there. I'm patient. I'm not going to rush. If it goes back to 70, I'll pick it up. But I'm not, I don't have a high expectation of that. All right, guys, I'm going to get going. Thank you all for watching. And I will see you all on the next one. Bye, guys.